Hello and welcome to the Money Show, your one-stop destination for all your personal finance queries. I'm Kavita Thaplial, and today once again we have a power-packed show where we'll be talking about markets, investments and your portfolio strategies as well. This is a show where we do your life financial planning as well. So what you can do is send across your question, anything about your financial goal or your investment that you need assistance from our experts, recommendation from our experts. All you have to do is just send across your questions on our WhatsApp number, which is 865-797-4571. We'll be flashing this number on the screen as well. There it goes. And we also have an email ID, which is themoneyshow@etnow.tv. Your questions can be on your financial goals, on your insurance policies, just in case you want any guidance from our experts, anything and everything about your financial goals and your financial life up ahead. Okay, so let's begin the show, and today we'll be starting with market outlook, considering that the fourth quarter results are almost done with. What is the new FY looking like? What should be the expectation from the first quarter results of the new financial year? I have with me a market expert and a very known voice in the market and investment industry, Dhiraj Relli, MD CEO, HDFC Securities. Dhiraj, good evening and welcome to the show. Thank you so much for your time today and a big responsibility of guiding our viewers towards their investments and their financial portfolio. So let me begin with this question. I was just mentioning that we are done with the Q4 results, and now is the new financial year. We are waiting for the Q1 results also to show up. But then before that, all the uncertainty, seems to be clearing out. There was a time when markets were really uncertain, looking at, the tariff situation. Then there was geopolitical tensions. Then, there were some things about monsoon not arriving. But then, we are seeing monsoon coming before the time frame as predicted earlier. So, a lot of concerns or the red flags that were there earlier have gone down. Okay, so what do you expect? Market will be in a flatline trajectory for some time now. How do you look at it?
Kavita, thank you for having me. I think you have articulated it very well that most of the big worries are behind us. So largely, markets are looking at the earnings growth in the fiscal FY26, and we are expecting quarter one to be a good quarter. We are expecting that on a Q on Q basis, as well as sequentially, we will see a 8 to 10% kind of an earning growth in Q1. I think that augurs very well for the markets, and somewhat of that is getting reflected in the mood in the markets in May also. Last year, particularly in the second half, we have seen significant corrections in the small caps and mid caps. Though indices level, there were nominal corrections, but in the portfolios of investors, they have had significant corrections. So we've seen some bit of a recovery in the small cap and mid cap, in particularly in the month of May only. I was looking at data till yesterday. Small cap is up by almost 8% and mid cap index is up by 5%, though Nifty is just up by 2% only in this month. So to that extent, we have seen a significant recovery in the mid cap and small cap space, and particularly at the stock levels, it is even better. So we are seeing green shoots in the market with the most of the worries behind us. We are looking at a good earning growth. As you rightly said, that monsoon has also arrived early and it has its own repercussions on the various sectors. So we are very positive for FY26.
Right. Dhiraj, now one question on the broader markets, that is mid-cap and small-cap space. Are we waiting for a time correction to come? Or you think even that phase has gone and now we are back? Now they are participating in this particular market trajectory?
In fact, there was no time correction. We've seen only significant price correction. Price correction was, very deep and significant, and we've seen correction to the extent of 30 to 50% in many stocks, something we are witnessing now as a recovery. So I don't see a significant time correction coming in. I think it's a phase where we are seeing the recovery in the prices. So we are not seeing any time correction here in small and mid cap.
Sure. Let's also talk about sectors. Most of the experts that come on the channel are looking at BFSI. That's always a recommended and a preferred sector. But apart from that, what's on your radar? How are you looking at the consumption story? Do you think there's any steam left? Because initially, when we started this calendar year, everyone was bullish on the consumption story. But then now the steam seems to be cooling off over there also. What are the sectors on your radar?
So in India, consumption has been a secular story, but of late in last few years, we have seen that most of the fast moving consumer companies have been struggling on the volume growth. They could able to do well on the bedrock of premiumization, and they could able to do well on the overall revenue, but volume growth is not there, and that trend is here to stay. We are still seeing sluggishness in the consumption, though monsoon will be positive and maybe it will lead to some improvement in the consumption, but it will still take more time to see upside in the FMCG companies. However, discretionary space is something we are very positive about, and we believe that's something going to do well. And with the changes in the taxation done by finance minister in the last budget, the impact of that extra money in the hands of taxpayers will be visible in this fiscal. And in any case, the fabric of society has also changed dramatically. They are all focusing on the low cost, low end discretionary spend. So that's where the most of the focus and energies are going from Indians as well. So that is one sector, something we see a significant upside, maybe it be hospitality, aviation, or low cost discretionary spends.
A sector that's become favorite for a lot of people, that is defense. Is it there on your radar?
See, we've been on time to time have been recommending defense stocks to our customers, and they've done really very well. At this stage, the valuations are punchy, and we believe that one can do a wait and watch in the defense space. Though long term, mid term story is structural story, and we believe that defense focus will remain very high for India, and with indigenous manufacturing as well as export or orders, we believe this sector will continue to do well. But one has to be very, very stock selective here because valuations are rich. Shipping companies may continue to do well, so that's where we see more opportunity. As you rightly said few minutes back, that the BFSI is one sector where we are seeing good green shoots, and particularly within the BFSI space, banks are fairly valued. We are going to see a lower credit cost, and we are going to see some NIM compression, but the lower credit cost will offset the NIM compressions. To that extent, I think the banks, particularly the large banks, both PSUs and private sector banks, are well placed to do well. I think customers who are expecting mid-teens kind of returns can take safely bet in the large banks.
Lastly, I also want to talk about IT. The concerns are still hovering on this sector. Time to go stock specific, or the entire story is slightly bleak right now? It's good to just stay away.
I think we are underweight on the IT sector as a whole on two counts.
Sure.
One, that there is a complete uncertainty around the IT spends, and also how AI will play out is something we need to see. And also the valuations are also more than long-term averages. So to that extent, I think IT for the time being is an avoid from our side.
Sure. Dhiraj, one of the expertise or USPs of HDFC Securities has been that you guys are also trend catchers, So any dark horse in this current moment, where you think this particular sector is about to do good or will be doing good, is just there on your radar. Maybe you're not invested in its sector, not recommended sector, but you still have it on your books.
I think the metals is a one space one can look at it closely, because there has been stimulus from China, and both in terms of fiscal as well as monetary policy. Domestic demand has also been good, so that's something one can look at it. Also, we believe that cement as a sector will continue to grow volume at 7 to 8%. We have witnessed a significant consolidated, in fact, unprecedented consolidation in the cement sector that has given pricing power. We are seeing some prices increasing in the southern India, followed by west and central India. So cement is one space one can watch it for mid to long term.
All right, now let's. I want to ask you a question from a viewer's point of view. You know, Dheeraj, our viewers are traders as well as investors. Now, talking about the market volatility, uncertainty this year so far that we've seen, is it that time for you to become a full-fledged investor rather than a trader, or you think that a certain percentage of your portfolio can be into trading, but it's good that you go heavy on investment, at least looking at the market conditions right now?
Kavita, actually, I've seen investors moving from to traders and becoming investors depending upon their appetite and market environment. But those who have wealth creation as an objective, I think they can continue to invest for midterm and long term in the markets and continue to beat inflation and get decent returns. So, from that point of view, I think bottom up strategy will definitely works well for them. If they can't do that, I think even investing into mutual funds in a staggered fashion will definitely help them in the wealth creation. As far as trading is concerned, I think it's a very informed activity. If one can really do an informed trading and want to make money after doing particular research or taking inputs from a credible research house like us, I think there are opportunities for people to do make money in trading as well.
Dheeraj, what is also happening is, people are getting all kind of gyan on social media, as far as putting their money in the market is concerned. People might just go on a YouTube channel, Instagram, or anywhere and everywhere, wherever they get a shortcut, rato rat amir banna kind of a formula. Having said that, since you are on this platform and a lot of our viewers are also young, I want you to help them understand the tricks, where they can actually make money. I mean, we get that investing is a boring process. You really need to know the fundamentals of an investment instruments, know where your money is going, and just sit over there. Maybe just monitor your investments. Don't do too much of, reshuffling in the portfolio. But having said that, investors these days, I'm talking about the young people, I'm talking about millennials who are much more aware now. I'm sure even you will agree, you must be interacting with so many of them. Even at your workplace, I'm sure you'll be getting a lot of those new breeds, who are aware. They are aware of the risk. They know discipline is important, but they also are not hesitating from taking any kind of a risk as far as their investments are concerned, as far as their hard-earned money is concerned. So what is that one tip, trick, or maybe a message that you want to give to them?
So, Kavita, earlier institutional investors had an unfair advantage with the information available to them. Now that information arbitrage is not there, and retail investors, young investors, small investors can also get access to the information almost on a real-time basis. It's available on social media platforms. It's available from the large brokerage houses and TV channels and media players like you. I think most of us do a credible job. Only few influencers or few unregistered players are a bit irresponsible. So one has to choose whom to follow wisely. If they can do that, half of their job is done. And then have a little bit more clarity on your objectives. If you are looking forward for an insta gratification, you have a different strategy. If you are looking forward to make money for your goals, like you want to travel abroad or you want to save it for a particular asset, then you have a different objective. So based on the different objectives, you can have different strategies in place rather than one size fits solution for everyone.
But then, do you agree that this generation is much more smarter? And if you were at that age, maybe this was something that you would want to have. Any specific quality of this newer generation when it comes to investment? You think that, oh, I wish I had that in me at that time, at that age.
Kavita, I'm a father of a 24-year-old girl. I can tell you
Okay, then
she
you.
So, though she's not reading the newspapers, but she's always ahead of me also in terms of knowing everything about the markets and also what's happening in the world. I think
Right, right.
they have their own network of gathering the information and news, and they are very well informed. They are very focused. We take them lightly, but they know what they are up to. So I have a high regard for this generation, and I think they are smart enough to filter noises and get the information right for their decision making also. So I am really, all in for the young investors.
Oh, that's lovely. But then I also want to ask you about your financial portfolio. I want to know what kind of an investor you are. What is the kind of money rapport do you have? I'm sure at the beginning of your career, I don't know. I mean, you can tell us if, you were so investment savvy. Since you are in the industry, possibility that yes, you could be so investment savvy. But then, knowing about investments and actually doing it is also two different things. So what is your money rapport? What is your investment portfolio like? Do you sleep at peace after putting all your money in equity?
First of all, my most of my investments are into equities, spread
Sure.
between the direct equity and the mutual funds. I don't do PMS and AIF much. Uh, I have some restrictions also, so of course I have to go for a long-term portfolio also. But having said that, I think in the initial years of my career, I was always going long in the investments. And of late, in last 4 5 years, I have done more asset allocation after crossing 50 age. I did invest into the real estate and also diversified into different asset classes. But if you are very young, you have a time in hand, one can take bet on the long term on the equities. I always believe equity as an asset class will outperform all possible asset classes in long term. So if you have time in hand, you can well weather the volatility, and you have a stomach to deal with the volatility in the market. One can go long in the markets. And if you want to focus really on wealth creation, then follow your asset allocation. So I think these are the few mantras one should follow. There are no right and wrongs. I think it's different solution for different set of investors, and that too at a different stages in their life.
Uh, any investment mistake that was a lesson for you that you can share with our viewers?
Oh, I've done many investment mistakes, and if I have to highlight, I think one, selling too early. When you happen
Okay.
to invest in a particular stock and that happens to be a
Sure.
good, and you are able to make a very good returns, you get tempted to sell in the short term, and then again you reinvest in the same. So I can tell you, particularly, I don't talk stock specific. This is no recommendation, but I've invested in the Maruti as a stock at a very early stage in early 2000, then sold it, then repurchased it, then purchased it again in my portfolio. So I think if you are happen to select a good stock and you see the structurally, it's a long-term great story. One should hold on for very long term, and that will help you to compound your wealth significantly.
Sure, sure. So, as far as your money is concerned, investment is concerned, boring is actually fun. Boring is equal to making you wealthy. Thank you so much, Dhiraj, for being on the show and helping our viewers towards making the financial portfolio and understanding the market. Thank you so much.
Thank you.
If you like this video, then like, share and subscribe to ET Now.